Hey, everybody. I'm back. I had a little hiatus there in the United States. My daughter is still recovering from the jet lag, so this is going to be a very, very quick stream. But it's been a little minute, as they say. Although I hate that phrase, it's been more than a minute. Got a few more days here on the power trend since I last recorded. So I just want to do a quick update. I think there's some softness in the price. A lot of people getting bearish. Maybe the price goes down. I have no idea. But I do know that we have these ranges based on the power trend, which is the 96% R squared. And I think it can give some comfort. This is probably going to be the only chart I'll do today. It's already afternoon Europe time, morning America. I updated it a little bit though. The tooltip is almost becoming unwieldy. I have a lot of information now, but I'm going to start small and build it out. Okay, so we can sort of understand what's happening. All right, so this is as of today. I pulled it in $111,500 Bitcoin. All right, it's softening quite a bit. It was up to 117, 120 on some day closes. In August, July, 123 was at the top, I think. August 13th. 123K. 12K down at the moment. I put some ranges here. All right. So remember, I always say to take this 0th percentile off the band because it's just never going to happen again. Now I have a range. I'm going to show you the amount of days that exist between bands. So actually I have to show two bands to sort of make sense of this. We're right on trend. All right, we go to the trend line here. You see the price, 111,000. Trend, 114,000. We are under trend, but we have been, picking a few days above trend, which is a good thing because we pull the trend line up and it's better for the future of Bitcoin. When we're below, the future of Bitcoin's adoption is slightly lower, but we're at almost all-time lows of being below the trend. Okay, as far as all-time days, I expect us to go back above like we have been doing during the prior 4-year cycles. It does not mean that we will. I have no idea what the top could be, but this is just how I'm looking at it in case people are having some Malox moments. So if you look here on the tooltip, all right, between 0.1 and 0.3x, the trend is really rare. All right, 250 days. 250 days out of 5,000 and I think it's 5,600 days of price action that we have for Bitcoin. 5,600 days. Only 250 days would be between these two lines. All right, and you see it's mostly here, following off a ripping trend from 2011. And remember that this is the all-time trend. The trend was different in 2011. Imagine it sort of parallel to these lines. Okay, when the price goes between the green area goes between these lines, that marks up a day in this range. Okay, so this is in that 250-day range. It's kind of weird with the two numbers, but I need to show you the two bands to sort of understand that. And we haven't been in this range since 2015. All right. The depths of the crypto winter, as it was called, even during the Sam Scam Bankman fraud debacle, we didn't hit it. All right. Based on my calculations, my percentiles. We were above 10% of observations based on the multiple over or under the power trend line at the time. So, hello, Anita. I will get there. I'm going to get there on. She asked about a fun top for this cycle. I'm absolutely going to get there. I've talked about it a lot, but just to sort of get back into my daily streams, daily-ish streams. I had a lot of traveling this week. I'll try to get there today as well, and tomorrow. Okay, so let me just verify one thing, the denominator for you, but it's think it's 5,600 days. 1 second. 1 second. All right. So extremely rare, but even, so let's just take this 0th percentile off. Okay, that's like, again, that's happened on the 0 has happened literally 1 day. All right, 1 day, and it's going to be somewhere, it's right here. All right, 1 day. It seems like 2, but it's really 1. It seems like 3 even. It's really going to be 1 day where we hit the 0th percentile of the multiple over or under trend. All right, this is going to means it was 0.1x, a 90% discount on what the power trend said. We haven't hit that in over 10 years. So I'm just taking that off for people's comfort. All right, we may go down in price. I have no idea. We may go down. But let's just pull it out now. Let's go out even a couple years. Let's go to the end of 2026. The 10th percentile, which would be an extreme drop, happens to be about the prior top, 56,000. Okay? So assuming we kind of follow the pattern of the last 4 years, we boom, then we crash. I have no idea if that's going to happen. I'm actually one of the people that is not so bearish. It seems like a lot of people are bearish that can't happen again because Wall Street's so involved. I think it could happen, absolutely. Maybe it's extended. Maybe it happens a little bit later. In the the 4-year cycle becomes a 5-year cycle. I have no idea, but I'm not discounting that we boom and then crash again. We could have people in high levels of American government being a part of the crash. Again, I have no idea. I don't know anything about a lot of these crypto products, new types of leverage that are coming into the Bitcoin treasury ethos that everybody seems to be on that bandwagon. I have no idea how the leverage game is going to unwind this cycle, but it always unwinds. We can be sure of that. It will always unwind. If we had a full unwinding like we had in the last cycles, and again, this is a very rare line to hit, all right, by the end of the year, next year, $56,000. All right, pull it out to mid-2027, $65,000 Bitcoin. There's your absolute dump of a price if it gets there. All right, now let's go up. But let's also show, keep in mind, when I show you these bands now, when you'll see the multiples over or under trend. Okay, so this is now 0.3 to 0.4. That is a 60 to 70% discount of the trend line. All right. These numbers, how long is it? How many days here? That's between the line you see and the line above. So the next line above is the 20th percentile range. Here we go. All right, I'm showing you every 10th. Okay, so this is a pretty tight band. But 440 days of Bitcoin's life, which, by the way, again, pricing life that I have in my model, 5,606 days. 440 days are between these two lines, okay, between the 1 and the 2. And you see that we pulled above there after the old crypto winter was thawing, late 2016, during the crazy season. All right, the words that shall not be named for censorship. We did fall below here. All right. Actually, on certain markets, went down to like 3,000 during this time, March 2020. And then we did hit it during the SBF, FTX, Celsius, Luna madness of 2022. We did. All right. So this is another sort of base case vomit scenario, which we might have. Let's go out to the end of 2026. What does this line tell us? $77,000 Bitcoin. Also a reasonable downside. Okay. Now, this model, as I've said many times, does not take into account any sort of short-term swings. Like, this is not a technical analysis. This is math. This is not a technical analysis. It's not swing trading. I have no idea about all that stuff. I prefer to not live my life that way anyway. So could we fall to these levels next week? Sure. We do have the 4-year cycles to kind of back of the envelope guide us. So I don't think that's likely at all, in my opinion. But could we fall to these levels? Sure. But then the question that you need to ask yourself is, if we fall to these levels, how likely or unlikely is that? All right, and so you add up these two ranges now, that is between the 0 and the 1, which is a big gap, all right, and the 1 and the 2, right? And so this is the first two sets of numbers now. It's kind of a little bit confusing, but the 250 and the 440 then will get you up to the number 2. The 448 that it says for number 2 is actually above number 2, but this is how I'm doing it. You'll see in a second. So we've had basically 700 days. It's a little over 10% of the time. Okay, a little over 10% of the actual time, 700 days. 700 days, 690 days, where Bitcoin is going to be below this number. 690 days out of 5,606 days of Bitcoin. Okay. Now, let's go up one more. Okay. These bands start to get really tight, so I'm just going to do these pretty quickly. But now between the 2 and the 3, 448 days, Bitcoin has been between these two bands. All right. Let's go up again. This is now between the 3 and the 4, 714 days. We start to see a little bit wider diapasons, or amount of time between each band. Diapason is probably not the right number, but the right word. But the frequency is longer between these bands, even though the bands themselves are very tight. Okay? What's the next one? Between the 50th and the 60th percentile, 746 days is above that. 676 is between the 4 and the 5. Let's put the 60. These are not the lines you can't even see that well. Sorry, but all right, we're getting to the power curve itself. 747 days. Sorry, again, I keep getting ahead of myself. That's above number 6. Between 5 and 6, you see 5 here, 6. Between these 5 and 6 bands, 746 days. All right, between 6 and 7, 549 days. And I'm even going to take off 2 now. And I'm going to go between 8 and 9 as well. All right, between 8 and 9, 550 days. Okay, so now, since I'm very complicated at my math, I'm just going to manually add these numbers that you see on the screen. And it's actually not including the 550 because that's above the number 8. I'm not even going to go there yet. 746 plus 747 plus 549. So 3,432 days divided by 5,606, 61% of the time. Okay, so 61% of the time, nearly 2/3 of the time, Bitcoin has been between these lines that you see, between line 3 and line 8. This is not, I did not add 550 days because that's between 8 and 9. It's a little bit harder in the tooltip to show the ranges, but that's what's going on. Okay, so 61% of the time, I think this is a good thing to think about. 61% of the time, Bitcoin is going to be between this rainbow, this ribbon here. All right, and so let's now, same thing. Let's see where we are. Let's climb up. Sorry, I'm losing my tooltip there. Let's climb to the end of the year. Roughly, all right, 175. Okay, sorry, not the end of this year, the end of next year. I'm going for conservative cases here. The end of next year, 175K on the trend. Remember, the trend at the end of this year is 125K, but the end of next year, for planning purposes, if you choose to look out that far, all right, I think a pretty base case, $90,000 Bitcoin. All right, although, as we said, it could go down to this number. Let's even put this on, but the percentages change what I told you. They even get bigger, right? You're up to maybe 65% now or something here. All right, again, end of next year. Between $78,000 Bitcoin and $235,000 Bitcoin. Trend itself, 175. Ordinary least squares. So 1, 2, 3, 4 numbers in this band are above today's price. 1, 2, 3 bands are at or below today's price. 2, 3, 4 bands are at or below. 5, 6, 7, 8 at or above. This is like the most basic way to look at it. You actually have, once you do the math, run the numbers, trust the power curve. I know, don't trust verify, but if you sort of look at the power curve as anchoring your expectations, this is probabilistically what's happening and what is very likely to happen. Again, I've said many times, I think the power curve is 95% of what's happening with Bitcoin price. Trump administration, Eurozone, World Economic Forum, gold, IMF, even wars. 5% of what's happening. This percentage will increase, that is, the real economy's percentage of Bitcoin's price increases over time. But this is such a strong correlation, such a strong R squared at the moment. We're only a $2 trillion asset when, again, pick your denominator. World broad money, 150,000. World base money, 30,000. Even if you go by world base money, which is under 30,000, as we know from my reports, less than 10% of world fiat base money, 10% of gold. So I'm using that denominator to think of another way. Why does Bitcoin do what it does? And it does what it does because it's a network, it's growing, it's worldwide, nearly uncensorable, all the rest, censorship resistant, all the buzzwords that we know. It's just doing what it does. It doesn't matter what newsletter you read. It doesn't matter who tells you Bitcoin's going to 1 million or Bitcoin's going to 0. We have this curve, which is a sustainable curve, which is totally different, by the way, than the S&P 500 or gold. All right, it's this nice, asymptotic, scalable, sustainable curve. So again, just to preempt people's nightmares that we might fall to 80,000 or something, and maybe we do. I have no idea. But if you look at what the price most probably, will be in the next 2 years, let's say, between 90 and 270. Imagine people can live with that. Thanks, Anita. Thank you. I'll get to core and knots as well. Okay, so anyway, going back to your original questions, Anita, we wanted to, people want to know where we could go this year. All right. So again, this tooltip gets really unwieldy with all my data here. But again, just so we can dissect this, what it's saying, let's even go to the end of this year now. All right, 2025, power curve is going to be 125K. You look at number 7. Look at number 7 on the tooltip. That's showing you the data between line 7 and 8. All right, so I have line 8 up there so you can see the range. But 1.1x the trend, 1.3x the trend. That happens, again, 10% of the time, roughly, 549 days. That could be between 137 and 170K Bitcoin at the end of the year. I think fairly reasonably. All right. Being below, and notice we have not pulled above the 8. All right. We've always pulled above the 8. We've always pulled above the 9, which I'm about to show you on every boom. No problem getting above the 8. People talk about softer and softer booms. Sure. But we still easily cleared the 8 in all prior booms. I have no idea. I have no idea if it's going to clear it this time, but I know people are getting a little bit scared with the softness in price. Just, people scared of this six-figure Bitcoin. Again, if you take the long view, you should have a lot of comfort here. Never financial advice. So being above the 8 is pretty reasonable to assume, even though, yes, we've had a really slow, grinding, churning bull here. We haven't had a magnificent jump like we have had in all prior ends of the 4-year cycle, 2021, 2017, 2013. My point is that I'm not ruling it out. Some people say it's not going to happen. I'm just not ruling it out. That's at least how I'm looking at it. Okay, so now let's get to the more fun numbers. I'm going to take off now. Let's take off the lower numbers just so you can sort of clear up at least for the upside. Again, this has nothing to do with timing. I have no idea, like 2 months, 3 months. I'm just showing you probabilistically how long Bitcoin has been in these bands. All right. Now, the interesting thing here, now that we have the 9th band, okay, then you're going to focus on, for the days in the band, this number, all right, number 8. All right, so you see between the 80th and the 90th, all right, 8 and 9. I know it should be 80, 90. I couldn't find an icon to do it, but between 8 and 9 is 1.3x to 2x the trend, okay? That occurs 550 days out of 5,600 days of Bitcoin's life. Again, it's roughly 10% of the days, okay? And by the way, if you're wondering why they're not exactly 10% each time, it's rounding, and it's also the ranges are not going to be equidistant. So this one is going to occur less frequent. Well, I'll get to that actually. This one is going to occur less frequent, the 90th to the 100th, because it happens a smaller amount of the time. So it's not like every 10th percentile is exactly going to be the exact same number. As you can see, this one is 1.3x to 2x, all right? And this is 2x to 7.8x. So the ranges are different, as you can see. All right, so let's again look between the 8 and the 9. 8 and the 9. We have, with some difficulty in the last bull, but not really much difficulty in the prior bulls before that, easily cleared the 9, all right? The 90th percentile. Here, a little bit tough in 2021. So again, I'm totally reasonable. Maybe if we don't clear it this time, I still think we could, but if we don't, all right, that means it's up to 2x, up to 2x. So again, for the end of the year now, just focusing on short term for this, not looking out to 2026. For the end of 2025, trend 125K, 2x, which would get you to the 9th level, the 9th band, 250K. So again, to me, all this seems totally reasonable still, simply based on the history. The only thing that I have to judge on sort of back of the envelope timing, when could this happen, could it happen, is the 4-year cycle. I've been pretty clear about it. I don't have, I don't knock on it. A lot of people do. They say it's over. I'm happy to declare it invalid if it's invalid by the end of the year. Until it's invalid, I'm not going to declare it invalid. So, yeah, that's how I'm looking at it right now with what Bitcoin does. Okay, and then just for fun, you could see where we could get to the 100th, which literally is 1 day now. So for the 100th percentile, way up there. All right, way up here. This is only, literally on this line, occurred only 1 day. As usually, 2011 here. There. Happened to be there. Bitcoin was $35. The trend line at the time was, not today, but at the time, not the all-time trend line, but at the time, the trend line was 7.8 times smaller than that. So whatever that math works out to, 4 something. whatever, I'll just do it for you. 35 roughly divided by 7.8, 4.48. So the trend line at the time for Bitcoin was the power trend at the time, $4.50. Bitcoin was at 35 bucks. That was a huge extension over the trend. We can measure that extension, draw the percentiles, draw the bands. Really hot. It was a pretty good guide for 2017, even though we didn't hit it. It's pretty good top signal. 2021, not as much. Okay, so then we can go over to my top 10 percentile bands, which I don't have drawn with days now, but I wanted to show you this because I think it's, to me, this shows me just rational figures about how long it can stay in a range. All right, and usually on the top or bottom ends, it's like 400 days or so, 400 to 500. In the middle range, where it stays most of the time, it can stay 700 days. All right, 700 days. And these are very light bands. I know I can't see them that well, but again, count even though we have four bands, we have 3 areas. So count the top 3. So 714 days, 676, 746. The sum of that number, all right, will get you between the outer ranges of these bands. I'm so complicated, I have to just do the math by hand and then tell you the all time. So 2,136. So again, divided by 5.6. Whoops. Sorry. 38% of the time. So 38% of the time, Bitcoin is going to be between, oops, did I just I took a band off, didn't I? These bands. All right. And that's how I'm looking at it. That's how I'm looking at this bull. I know, I almost feel like fall, as we get into the autumn here in the Northern Hemisphere, people are thinking that this is kind of going to be like it was when the Trump administration came in. They thought it was going to be a barrage of announcements that, government's buying Bitcoin every day. The market is really hoping on this 4-year cycle. As they say, if you hope, we could say it anyway. If this, it's very possible the market is usually wrong from what most people think. I don't think most people in the world understand the 4-year cycle, but perhaps most people in the Bitcoin space understand the 4-year cycle. So it's totally possible that the market could be wrong this time. On the other hand, sometimes this stuff is a self-fulfilling prophecy, and we've seen it happen before. So again, I don't feel any, I could understand if you feel that, you need to sell some Bitcoin for, I don't know, a down payment on a house, or you're a little bit worried short term for something you really need to do. But over the long run, again, the HODL mentality, that's the point of showing you these bands. Like, it can stay 2 years in such a range, right? Of course, it's not really 2 years. 2 years is the sum total, all right, of it in one of these bands. But it can stay a long time cumulatively in these bands. Okay? So that's what I just wanted to get out here. I sort of added this to the tooltip, show the ranges now to make it sort of really clear. And the most rare items are obviously the extreme ranges. Okay, so again, going back to here, which is the 0th percentile is number 0. The 10th percentile is number 1. Between these bands, only 250 days. All right, price action would be here, 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 here. Okay, so it's rare. And again, we haven't had it there. So to probably like put the likely or extremes, I wouldn't even, I would say the 2 to the 8. 2 to the 8. And now this is where it makes a little bit less sense, because this is between the 2 and the 3, the number. Got to think about that with the tooltip, but let's put them all in. 2, 3, 4, 5, 6, 7, 8. this band. Very, very likely that the price of Bitcoin falls within this range. Lo and behold, it is. All right, lo and behold, the power trend is here. So to me, nothing to get worried about, nothing to freak out about. The softness in price. Who knows? Maybe it's even gone down since I started this video, right? What did I have 25 September pulled up as? When I pulled it into the model. God, gotta zoom in so much. 111,520. Just checking for the fun of it. I see 111,400, 350. Quite volatile and slipping. So it does. All right. Is it going to slip down to the number 5 here? Maybe. Number 5 is 89,000. By the end of the year, number 5 is 95, something like that. 96. Okay. This is where, the technical analysis obviously takes over. People really want to try to play the charts. Just trying to show you big picture. These were great buying opportunities right here at the start of this year. Thank you, sir. Appreciate it. So anyway, I just wanted to make this video today because I've been out, obviously, for over a week. As always, I'll come back to this. You can see these sort of ranges. The ranges of time, the ranges of the different ranges on the of the multiple. Sorry, I'm lost for words here. That of the multiple. So, 50, 60% discount on the trend line here, 30 or 100% premium on the trend here. Okay, roughly 500-600 days, and right in the middle, 700 days. It can be between these lines. So again, if I would put the 90th and above, which I do think we can get there, I really do, at the end of the year or start of next year, again, that's over 250K. I think probably max 350K, and that's based on, that gets you up to the 94th percentile or something like that. And that's only based on the prior cycles, okay? So I presume it's also reasonable to assume we have a lower top based on where this multiple is over the 9. All right, each time it gets lower and lower, all right, which is reasonable to assume as it gets more and more adoption. All right, so just really another quick back of the envelope here. If you look at here, I know that it got to like $1,200 on some exchanges here, but I think I only have like 1,100. Yeah, maybe here. Was it 29th November? Number 9 is about $300. Price at the time, 1,100. All right, so nearly 4x, not quite. You could do the exact math, 3 and change, whatever. Call it 3.5x. I don't know the math. I'm just not going to do it. 3.5x. Number 9 is where the price got to. Let's go to 2017. I think it was December 16th was the top. Yeah. At least on the intraday or on the daily close. Not intraday. So on December 16th, 2017, 19,000, 20,000 over number 9. All right. Again, 3 and change, actually. Should do the exact math here because it's going to be a little bit lower than 2013, but 19,640 divided by, what's the, just lost it, 6,512. Actually, it's about 3. So it's higher than 3, but closer to 4 in 2017. About 3 here. It's even going to be lower here now. I know I've done this analysis before, but wherever the top was. Let's call it here. 635, let's just say, divided by 43. All right. 635 divided by 43,000. 1.5. Okay, so we went from multiples of 3 to only multiples of 1.5 above the 9. So again, that's where I think you're really in super, because this thing gets more data and softer tops. Doesn't mean we can't have a blow off top, but I just think you're pushing your luck to think that Bitcoin's going to extend well above the 9 here. In 2021, it did 1.5x based on the multiple of the price over trend, or the price over the 9 in this case. So, of course, back of the envelope with that, what is, remember, the trend is 125 at year end, 125. 250 is going to be number 9. All right. Let's just show you exactly so people can follow what I'm doing. See the trend, the black line, 125K, the number 9, 250K, so it's a clear 2x. But then I said, what's the multiple over 9? It's probably not going to be more than 1.5. That was the 2021. All right, so 250 times 1.5, max 375. Same thing I've been always saying, just a different way of getting to it. 250 to 350 would be pretty big silly season based on the math. And then taking it out a little bit further, again, I think this is even, number 9 is high. All right, it's a little bit hot. Let's even take that off. And let's just assume, again, here, the number 2 to the number 8. All right, most of the time, well over 2/3 of the time, represented in between these bands. Let's go out to the end of 2026 again, right? Trend 175K. Worst case, which can always get worse, I know. 80K, you go down in a band, you'll get to the prior top, right? Which sometimes tends to work. 60K. 80K Bitcoin, or 235K at the top end. These are the ranges. It's a big range, by the way. I'll do this analysis again on like Apple or the S&P 500. These ranges are much tighter in developed markets. Here, the volatility gets the return, right? So 0.4x the trend, or 60% discount of trend, or 100% premium of the trend, 2x the trend. You smash all that together, obviously that's a big delta. You know, your range, 80K to 240K. It's a big delta still. So, again, I know we have some softness in price. I know people getting bearish. Been bearish for a while. Maybe we go bear. Maybe we go, maybe this is the top. Who knows? I tend to not want to say that until it's been perfectly validated, right? Just because I do think the prior 4-year cycles are a strong enough indicator to take seriously. But again, on the other side, if you don't even think about that, don't even worry about it, I would say just look at these bands as far as like either maybe selling opportunities, maybe, up to you, or definite buying opportunities. Okay, definite buying opportunity if Bitcoin goes back down to 70, 80K. And by the way, think about if that happens even right now, because remember, it was already at 70, 80K. Wait, sorry. So quick here. Yeah, in March of 2025, huge buying opportunity right here when it fell below this 6. Maybe it goes down there again. Maybe not. You see right now we're in the 6 and 7, right on trend. So nothing's actually changed, even though I haven't filmed in 10 days or so. more than 10 days, I guess. Close to a week, 13 days. Close to 2 weeks, sorry. Close to 2 weeks. I just like coming back to this chart. I think this is probably the most helpful chart in seeing what Bitcoin is, what it does, how it works on a user adoption level. This is just people figuring out Bitcoin. All right, it grows really fast. All right, remember this black line grows $100 a day. Grows fast. So I think you got to get off zero if you're not there. If you're worried about where we could fall back down, I would just say embrace bears. Yeah, I can understand if it's a little bit mailbox moment, if you might have to sell some, like I said, for down payment on a house or something. You always want to get the best price, but if you have the HODL view, if you have the long-term view, there's really not much to worry about. Because look, let's stretch this out 2.5 years. All right, 100K Bitcoin is pretty likely the floor. It's only 2 years from now. Hello, Mark. Good question. So this is ordinary least squares. It's just a regression number. It's based on a formula. The bottom line is why it's not number 5 is because that would be the 50th percentile, and based on this analysis, it doesn't have to do that. That's just the 50th percentile. That's just what it is, the 50th percentile. This is the power curve, which is according to the formula, which is ordinary least squares, which is it's a regression. All right, it's the best fit that it finds, but the best fit is not always the average. It's not always the median. It's not always the mode, which would be, I think mode would be 50th percentile. Let me actually ask that question to Gemini. No, I'm not right. Sorry. It's the median, of course. Yeah, it's a median. Sorry, it's been a long trip. I haven't got a lot of sleep here. The 50th percentile is the median, of course. So it's if you stack all of the observations, all right? And by the way, you have to normalize the observations. So how do I normalize something where the price is always flying up? It's the multiple over or under trend. All right, so these multiples, right, you see here these ranges, 0.4x, 0.5x, right, all that. The median is what, if you figure out all the multiples at any time, price over trend, price under trend, price over trend, price under trend, you take them all, the whole data set, you list them out, smallest to largest, not what's the average, what's in the middle, what's the middle number. That's the 50th percentile, that's the median. So as you can see here, the 50th percentile is right here. Actually, it is right. It's this one. It's hard to see. It's this yellow line. This is the 50th percentile. This is the median. I think it probably would make sense if I do average, median, and mode. So mode is the most frequent, which is what I was trying to say before. Most frequent value is not always necessarily the median. All right. And the mean, of course, is different entirely. That's just based on the sum of all these multiples over or under trend divided by the number of observations, which, like I said, is 5,600. So that's the answer. Hope I answered that clearly enough for you. Good evening, Tim. Afternoon pod for me as well. I'm going to sign off here very soon. Just my daughter's getting some extra sleep after some jet lag, but yeah, it's good to be back. Good to be filming. Good to see you. So it's a good point. All these little indicators help, right? The big difference I want to say though of what this thing is versus like stuff that you calculate on TradingView is it's actually like it's a statistical regression. Okay, so it's not. They are using things like in the formula, the way you calculate it, it uses things like standard deviation, like averages, but it's using this thing called a power function, which basically is, in this case, it's a function of price and time. All right, so it's not a function of the date. It has nothing to do with what you see here as dates. It's just days since the Genesis block. So January 3rd, 2009 is day one. You can't start at day zero here, unlike other financial formulas. Genesis block is day one. Right now we're at 5,606 days of price, plus another 400 days or something. We're at the 6,000th and some day of Bitcoin itself. But pricing data only have 5,600 days. But regardless, the time function, which is the x-axis, all right, here, if you can imagine, and I could make charts like it just to show you, we're at something like the 6,000th day of Bitcoin. So this is different than like a TradingView chart. I know people have figured out how to put these sorts of regressions into TradingView. It doesn't seem that complicated, but it actually kind of is, because TradingView's x-axis is not a number. It's an ISO. It's a date. That's how a lot of this technical analysis works. This is a number. The x-axis here has nothing to do with the dates. It doesn't assume July 17th is any stronger because of any political. This is an important point, actually. In, when Trump got elected or whatever, it doesn't assume that this is a more important date in time, and it doesn't assume any more weight to it or whatever. It's just one more day in the calculation. And if you run a lot of these TradingView indicators, it's actually not exactly like that. Okay, they just run. There's a lot of weird, these Fibonacci, all these things. Certainly it's mathematical based, but they're usually not looking at it from the start of a period. They might look at it from days back, right, of today, right, like the 200-day moving average, right? That's obviously one of the most tracked financial indicators, the 200 and the 50-day, right? You get the cross. When the 50-day falls below the 200, that would be the death cross or something like the death cross, right? Opposite, golden cross, when the 50-day goes back above the 200. But that's looking at things from today and going backward. Here, I'm starting on the Genesis block. It's an important point. And I'm running just like imagine one of those statistical scatter plots where like you have a drug and you want to see, okay, does this drug work? And you have all the different variables. You can have many variables to do a stats run, a regression. Is the headache going away? Are people having side effects? You can put all these variables in, and you can try to see if the effect is positive or negative of taking the drug. It's actually more akin to that, what this line is showing. It's just a regression. It's a function of time. And time has nothing to do with years. It just has to do with days. We could run this, by the way, on block time. I could run it on block time too. I have not, but I could. That would be very similar. Maybe even higher R squared. Giovanni might have done that, but basically you can imagine here the axis is, like I said, 5,600 pricing days, but the actual axis, just to give you the full layout, this is 6,109 is September 25th. So right here, the way this line calculates, and it goes to the next step up, is it's a simple formula. All right, so it's the y-intercept times x, which is 6,109 at the moment, multiplied by a slope, or sorry, not multiplied, but raised to a slope, an exponent, which is the power of the power curve, which is 5.78 for me. People might have similar numbers. Don't worry about the intercept as much. But anyway, you crunch the numbers, you do the power regression. You can also find this stuff on my website, all the formulas. It will give you this number. All right, so I know this might sound boring to some people that have just been listening to the whole video and I tune in, but it's actually it's a completely different idea than running a 200-day moving average. And it actually only relies on time. It only relies on the data points itself and then time, which is what I and many people that have been following this for a long time have been saying. This is an interesting proxy for adoption. And by the way, the other super interesting thing is no other financial asset works this way. All other financial assets on log scale, if you would do a regression, the best fitting regression would be exponential, not power. Not power. So this sort of nicely sloping asymptotic curve makes more sense for networks than it does for markets, which is interesting and has whole lots of implications, which I'll get to later. Sorry, Mark, I'm just reading. For Bitcoin, it seems that the median is always lower than the regression. It doesn't have to be for other regressions. It's just you have to do the calculation to see. I can't say equivocally, but because look, you can see here, see how it changes, it evolves. Well, I'm jumping around. This black line also didn't exist at the time. It was more parallel. Let me show you here. This is the all-time line, all right? And as we get closer to the present day, they get parallel. And then when we project out, they're parallel. Okay, so at the moment, yes, we can say the median of all, it's not all prices, but it's all multiples. I'm running this over all the statistical analysis here happens over the multiple, over or under the power trend. So 0.8x, the power trend is actually the median, all right, which is goes to the idea that the price is usually pulling the trend down, not pulling it up. It would be great if it was always pulling it higher and higher, but it's not. It's making it more subtle, more dampened. Okay, and yeah, presumably, we could maybe after 10 years, these numbers would become very, very close to each other, but they're just not at the moment. Like, let's go back here. So again, this line didn't exist at the time. This was the median at the time. And you just keep calculating it to see where it will fall. Let me do it's a good point. I'll update this chart with the mean, the median, and also the mode, which is most frequent. That should also be different than the OLS, which is this. So 4 different ways, actually, you can kind of generally see what's most frequent, what's happened, what are the most common values. A lot of data. The point is it's a lot of data. Yeah, totally agree with you, by the way. And I do this for my own sanity, by the way. That's why I jump on and make these videos. Totally agree with you, Mark. And yes, this is what I have been saying. Your point here is spot on. Let me pull one up. I haven't been doing it just because I wanted to keep this stream short. And again, I do got to jump, guys, but I'll be back tomorrow morning at the regular time. But here, let me pull up S&P 500. I think I only have this till June. But I'll pull it up just so you can see. And I think I have it going back to 1971, if it ever will get here. Okay. So here's the S&P 500. Okay. I can have these second and 2.5, 97.5 percentile. Okay. So of course it evolves. It goes faster or slower at different times. But if you just slap a regression, you can see that on log scale, all right, it's a straight line. That's the stock market. And everything looks this way. Gold, you're totally right. Gold, bonds, everything is quoted as an exponential number, a compound or a geometric number, a constant number. Bitcoin is different. Bitcoin actually grows. It sounds less exciting than it is. It grows slower every year. But in networks, that's a good thing. It's in cities, that's a good thing. Cities grow slower every year, generally, compared to their base, or not. They don't even have a base. And compared to like 10 years ago, cities are growing slower, actually, or 100 years ago for sure. Cities grow in power. Networks grow in power. So it makes sense that Bitcoin's growing in power like this, but it is also weird because Bitcoin's a financial asset, and we have other financial assets, which exponential for sure is stronger growth. It's faster growth. It's constant growth. So you're totally right to make that observation. And it's one of the main questions I've been posing sort of to the community. I do these presentations as well. Like, Bitcoin's still growing at 42% per year compound. It's the best performing asset in the world for sure, and the safest per the return, according to me. But, what might happen in the world if Bitcoin starts to decrease down to about 10% per year, which, by the way, will happen in about 2070. And of course, stock markets, everything, they typically grow faster and faster, right? So I have other charts which show, if we looked at the S&P 500 stretched back over 200 years, the all-time trend would be much lower. I don't know what it would be. Over 200 full years, it might be 5%. All right, this trend line is 7%. That's looking back to 1950. From only 2008, if you only looked at here, look at this. You can see that it's clearly growing faster than the black line. Started below the black line, is above the black line. It doesn't mean we might not have a huge market crash. I'm not talking about that. I'm just saying the growth rate is actually faster if you pick this point. It's actually growing like 12% per year, or 11 and change. So this goes back to the Jeffrey West stuff. Read that book, Scale. It's a great book. We have super exponential growth. And you can kind of see it here. Like, look in the 50s and the 60s, it's flatter. It's actually flatter. All right, and then we move fast. We do have a huge crash in 2008, more than the .com. But if you assume that the post-2008 era was a new monetary era, which I do, you can restart the growth, and we're even growing faster. So it's not only inflation. Inflation's a big part of it, but there also are technological advances, inventions, AI. It actually makes sense that we grow faster now than we grew the stock market 200 years ago. So the picture is more mixed than a lot of the simple newsletter writers are going to tell you. Anyway, I'm getting way into it. Correct. Yes. Bitcoin grows slower every year. So I have a chart for this. I can pull it up. On a curve, on a regression, Bitcoin grows slower, but of course it's way faster than other markets at the moment. But there's going to be a question there because power curves sustain themselves. Exponential curves do not sustain themselves. Exponential curves are more likely to have booms and busts and problems just because of their exponential nature. So I'll try to show you that here in a second. Charts are loading slow because I haven't pulled them up in a while. But it's a good point, Mark, actually. I'll try to get on this one. There's so much data here. Maybe I'll have a separate one with mean, mode, median, and power regression. Gosh darn it, why isn't that one? Well, it's not pulling up, but basically the rate of change here, if you looked at 111,000 divided by September 25th, 2024's price, all right, it's about 42%. Not actual price, but regression price. So it's right there. 80,000. Now we're at, on a curve, 114,000. Do the math. It's like 42%. It's going to be 42% exactly by the end of the year. Close to exact. All right, I finally got it to draw. Hold on. Here it is. All right, so this is Bitcoin on a curve. These are the actual crazy returns. You can have crazy, amazing returns, thousands of percent, tens of thousands of percent here. Also big negatives. Negatives are below zero on this chart. But on a curve, take out the noise. It's here. All right, thousands of percent back in 2011. Now we're at 42.8. It'll be exactly 42% by the end of the year, more or less. And as you can see, even though we get huge prices, it's great for people in the space, right? Or at least huge hedges against inflation. The rate of growth on the regression falls. Okay. And if I did this chart on here, same chart, it would just be a straight line, right? Straight line on the all-time curve. It's growing at whatever, 7% per year compounded, plus 2% dividends reinvested. So this is going to be a big question mark that I don't know the answer to either, is what happens when this dotted line, and the answer is, by the way, by 2070, what happens when it gets too close to stock market levels. And so what I've been saying is either Bitcoin is going to pull the whole world into the power type curve, sustainable network type growth. But in that case, interest will not work. Regular rates of interest, compound interest just won't work. You have a limited amount of Satoshis. If we're all on a Satoshi standard, it's impossible to calculate compound growth without, you just can't. You actually cannot. Limited amount of Satoshis, we're all on a Satoshi standard, that's it. You can't do it. You can have certificates and all that other stuff, but if you're going to start lending on those things, the only way that you can have interest that makes sense is if Bitcoin goes exponential, which, by the way, could happen. So if Bitcoin, if here somewhere Bitcoin becomes, and by the way, I don't think it's a good thing if Bitcoin goes exponential, because it probably means it's captured. Maybe it's massively reserved by governments. It's captured. You can't only have a couple addresses. You're KYC'd everywhere. Of course, you can have it, but that's a black market, right? But on the white market, everybody knows your Bitcoin address, which, by the way, is insane, because if everybody knows your Bitcoin address, they know your wealth, which is less privacy than we have today. So that doesn't make any sense. But anyway, in that world, yes, you can have, in a world where Bitcoin goes exponential, like gold, like stocks, then you can calculate compound interest on the Bitcoin network. But right now, you actually can't. The only reason, Bitcoin-backed loans works for Bitcoin is because the growth rate of Bitcoin is so huge compared to the amount of interest that people drawing on their Bitcoin pay. I'm not saying it's a good or bad thing to do at the time for any one individual. Like if you got, an excess of Bitcoin that you want to take a loan on in fiat, be my guest. But it sort of works at the moment because you're your Bitcoin grows at 42% per year, where your loan still has an expensive rate, might be 10%. But that math won't hold forever. So I went on a big tangent there, Mark, but hopefully that helped a little bit. I've talked about this a lot before. That's how it looks. All right, guys, I got to sign off today. I'm back though. I'll film again tomorrow morning, Europe time. Try to put some more color on this power curve as always. But this is a pretty solid line. All right, 96% R squared, great regression analysis. Be comfortable with it. The median, or the 50th percentile, is by year end 96,000. By the way, that's 0.8x the trend, as you see. 0.8x the trend. And that's how it looks. So my message remains the same. Let's all keep calm, carry on. Price may drop. I have no idea, but these are the levels. All right, guys. Thank you for watching. Signing off. Take care.